Over the past few decades, markets have changed drastically, especially when it comes to access to the contracts by traders. Contracts like Brent futures were originally traded on the open outcry from 1988, but since 2005, they've been traded on the electronic exchange. Initially, banks would help participants to manage their risk by entering a bilateral trade. But there was limited transparency, as they would put together contracts with their assigned value and provide the credit line for the physical players to trade it. After the 2008 crash, the trade margins were largely lowered, with the drop in interest rates. This made the risk-reward for banks unattractive. Before 2012, there were few oil-related contracts on the exchanges. Only a few futures benchmarks allowed the risk managers and oil traders to trade. However, in 2012, Intercontinental Exchange, also known as ICE, listed swap contracts, and soon after, Chicago Mercantile Exchange followed. The result has been greater transparency and participation in the market. Since then, the exchanges have been the primary place for traders to buy and sell contracts. The main exchanges in the oil products are ICE, CME, SGX, and Shanghai International Energy Exchange for professional traders. There are still bilateral trades between businesses. However, with the rise of market makers and the improved liquidity with their activities, access to the exchanges is essential for participants with physical exposure. The appetite for betting on markets has increased rapidly. The 2021 GameStop mania is a good example of this. There is growing interest from retail investors in the energy-related assets, with various platforms introducing gasoline, gas oil, heating oil futures, as well as crude and natural gas. With these platforms, anyone could have access to these niche markets. Usually the platforms do a back-to-back trade when orders come from retail trades and generate revenue from bid-offer spread. But generally speaking, greater participation ensures better liquidity and more robust markets.